QE4 is on the way and the markets are awaiting its arrival. So today we will discuss the Fed's QE4 helicopter drop needed. You came here for the truth, so let me unveil that for you. On the right-hand side here, we have the individual citizen who will become so rich, and all because of the helicopter drop that Ben Bernanke discussed in 2002 in reference to Milton Friedman. I'm sure you've read that speech before. I've covered it here on the channel. So let's get into the details today as we see stocks ending lower and a couple big companies like Caterpillar and Microsoft disappointing. And this quote is from Hogan. He's a market strategist. It's a combination of an increase in volatility when you have a decrease in volume and a transition period between seeing the ill effects of lower energy prices on companies hurt by the stronger dollar and a weaker commodity prices before we see the benefits of better consumer spending. Now, he's right on some counts here. However, they believe that this consumer spending is going to pick up because, of course, when most of the economy is riding on consumer spending, if that is in trouble, then the entire economy and the world will be affected by that because of globalization and how important the American consumer is to the global economy. So I do, in a way, agree with them, but of course, they're never willing to admit the truth that there is no consumer spending increase going to happen in the near future. This is Apple posting the biggest quarterly profit in history. So what we have is a schism that has formed in between those who are willing to go further into debt or who can go further into debt and those who simply cannot afford it. So we have the food stamp statistics that I've shown here before as an example, and then on the opposite end of the spectrum you have those who are able to buy $700 phones. So regardless, we are seeing stocks that have risen dramatically, and there are other stocks which just can't seem to reach their previous highs. So that is something to note here, that it is not the entire stock market that has increased. It is a select few stocks that have really done well. And this is out of the Wall Street Journal. The stronger dollar is slicing sales and profits at big American companies, prompting them to put renewed emphasis on cost cutting and cramping the broader U.S. economy. So we have a strong dollar that is taking place right now in comparison to the euro, for example. When you have nations like Japan printing up currency, you're going to have the U.S. dollar being sort of a safe haven in a way, even though we know where it's headed. The currency effects are hitting a wide swath of corporate America, from consumer products, Procter & Gamble, Microsoft, and even Pfizer. Those companies and others have expanded aggressively overseas in search of growth and are now finding that those sales are shrinking in value or not keeping up with the dollar-based costs. That's what happens when you have massive fluctuations in a currency. You're going to have these problems. So this is why oftentimes countries want to pull their money out and put it overseas. Even very rich investors do the same thing because they don't want this fluctuation. They want to earn money overseas and keep their profits overseas. So again, they mention Apple in here and how they're surging profits, but also a drag on its results as well with the strong dollar. We're going to move on right here. Such large and growing federal debt would have serious negative consequences, including increasing federal spending for interest payments, remember that, restraining economic growth in the long term, giving policymakers less flexibility to respond to unexpected challenges, and eventually heightening the risk of the financial crisis. That's according to the CBO. And right here, I want to note a few things, and that is federal spending on interest payments. If we have an increase in these, we would be unable to pay off the interest. If they're going to actually increase the rates from below zero, in fact, is where they are, to a respectable level, they're not going to pay back their debt. It becomes even more impossible. It's already impossible to pay back, but with a legitimate amount of interest that they would have to pay, it would be simply impossible, simply mathematically impossible. And here they are with a very big challenge because they want to increase interest rates, because they want to have their reality back, but of course they can't do that because, not to mention the individual, but the actual government would collapse under this scenario. And here's a chart at the bottom. You could see the fraudulent years during the Clinton administration where they swapped the money around and actually was able to create a surplus, and all they did was have intragovernmental debt. You can look that up for yourself. Right here out of MarketWatch, what we're having is undoubtedly a situation, but let me just read this for you. While there are growing doubts among economists that the Federal Reserve will make their first hike in short-term interest rates in June, don't look for the U.S. Central Bank to give any hints. And then they go on to say some more things. We're going to have this meeting that, may have already taken place by the time you're watching this video. They're going to make their statement here, and what we will have is nothing but more of the same. If, in fact, they do surprise the markets and increase the interest rates, they're going to do so at such a small level that it is completely insignificant. Even if they do bring it up, perhaps 0.25%. This will be, allow them to basically show the economy that, yes, in fact, everything is doing well. Don't worry, we're going to do this slowly and surely, just like we did with the QE scaling back. We can do this with the interest rates. But as soon as it gets up to an actual respectable level, a historical average of, let's say, even 5% or 3%, in fact, they are going to run into big, big trouble. Economists at RBS, Goldman Sachs, and ICAP have pushed their forecast for the first Fed move from June to September. See, they know what's going on, that they simply cannot increase the interest rates right now because the economy is too weak. You're looking at the stock market. Yeah, it's done well over the past few years, that's for sure, but the actual real unemployment is struggling. We have many particular stocks actually not doing very well. Then you look at the situation in Europe. Then you look at what's happening here in the US in many different ways, and I'll get to that in just a moment. But obviously, that is worrying the Federal Reserve. And how can they weaken their dollar right now should they want to not be as unattractive in terms of exports and other things? Well, they can simply engage in QE4. So we need to look for that in the near future. This is from my book, When Inflation Just Isn't Enough, Hyperinflation. Hyperinflation is essentially inflation on steroids. It occurs when the currency loses value fast because of extreme money printing. The result is always a failed and desperate attempt to print just another batch that will fix everything. And then I say how it's occurred countless times. Way back in history, it's occurred in the US 2 times. We had Weimar Germany, of course. We had Zimbabwe. We have all of these other countries engaging in these policies that are completely a failure every single time, but they're going to do it again. When they hit the wall, when they bring the interest rates all the way down, and that simply doesn't work, when they run into any issue at all, printing money is the solution. And this is a very, very big concern because they've already gone through 3 rounds, and still the dollar has actually done well because the other countries are doing worse. But we are seeing inflation in certain things such as food prices being extremely important and electricity prices year over year over year over year increasing. So this is making its way into certain things, and it is making its way into certain particular stocks in the stock market, not the entire whole stock market in general. And this is what I wanted to get to, and I kept mentioning beneficiaries of disability program up 50% in a decade. Look at this. It is a straight line upward from the 1960s up until the present, where you're looking at disability increasing 50% in simply one decade. And this goes to show you various things, but I'm just going to note for the purposes of this video, the burden on the US government is extremely bad right now, and it continues to increase. It continues to escalate. They can't pay back this debt if it continues to increase. If the interest rates are going to increase, that means their debt, the interest payments on their debt is going to increase. They can't do it. It's simply not possible. And then when you add in that extra layer of countries buying up less of the US debt, guess who has to be there to pick up the tab? That's right, Ben Bernanke, Janet Yellen, and the money printing I showed you at the beginning. The people are going to get their currency, except it's going to be worthless confetti. And here is just one thing I wanted to note, and this is out of the Washington Post. And we have a situation right now where Obama, the Lord and Savior, as Mr. Fox had said, that he is opening up the doors to Cuba slowly but surely. Upon reaching U.S. customs, they pull out their Cuban documents and request asylum, or ask to stay under the protections offered by the 1966 Cuban Adjustment Act, which offers permanent residency to Cubans after 1 year of arrival in the United States. Okay, so the reason that I am mentioning this here is, number one, when we have a president that acts unilaterally, this is a huge problem. This is something that he has done with the NDAA and so many other actions, executive actions as he likes to call them, is simply illegal. But it goes to show you how far he's willing to go when even the government, the Congress, would vote on practically every single war. He still goes to war without the congressional approval. So that's one thing. The next thing is that we say that when you have the government in control, when you have big government, that they can run it efficiently. But in Cuba, you have big government making every single decision, rationing every single thing, and look at what it does. Now, of course, this is just a small thing that I'm looking at. I'm very generalizing here, but just wanted to show you this to shed some light on the topic. And essentially what we have is big government. They control everything. They ration everything. And it is a terrible scenario for the Cuban people, clearly showing you that when as soon as the door opens up, they flee their country and they run for the United States, which has its own problems to deal with right now. And yet the Cubans and all of the Latin Americans right now, when we saw the immigration that was taking place, massive inflows of the immigrants coming in, all because of the doors being opened. And that goes to show you the difference between a government that is big or one that is trying to get there. So let's move on to this last article. I wanted to show you this. Why a fake article titled "Cuckoo for Cocoa Puffs" was accepted by 17 medical journals. And this individual here, basically, he gets all these spam. He's a medical researcher at Harvard. He gets all these spam and says basically they'll publish his research if he pays $500. So he goes ahead and actually creates this fake article, and it actually was accepted by 17 medical journals. Now, this right here is obviously a big problem. Goes to show you how bad things are. The regulations aren't actually controlling where we need them most. And this is just one thing I wanted to note, because the government, those who are there to put protections in place, whether it's the FDA, the USDA, or whether it's our Congress or anything, they impose all of these laws, they pass all of these bills, they become these acts, and everything that goes along in the government. We know specifically that they have these bills that they're supposed to read that are thousands upon thousands of pages. They never read them. They sign on the dot, and there are always things that have nothing to do with the bill itself stuck into the bottom, right into the fine print, and are always the worst, most offending things about that bill. And they hide it from us because simply they know how bad things are. But this is just one example of how they can sneak things through, and the regulators, those who are there to protect us, are simply not going to pick up on it because that's not the way it works. That's all I wanted to talk about for this video here. If you found it informative, please give me a thumbs up. I'd also like to say that we are now headed towards 15,000 subscribers. Thank you to each and every one of you. Thank you for all the emails. My inbox is absolutely flooded, but I'm getting back to each and every one of you. Have no fear. There's about a week delay on my standard email, the David@themoney.gps. So if you want to, definitely a more quicker response time, you have to get on the insiders. That's where I reply to everybody first. I'm definitely running behind on the emails, but I'm trying to reply to emails, trying to reply to comments. I'm working on my website still. There's big construction going on there, and I have plans, big plans for the Money GPS, and I am very grateful to each and every one of you who have messaged me personally and who have said that they are interested in all of this information that I plan to bring out. If you want to get in the insiders, all you have to do is go to themoneygps.com, scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.